Hey, okay, trade in the session open. One of my favorite systems that I use. You won't see it anywhere else. Not the way I use it. It's an adaptation of a guy I learned many things from. His name's Lance Beggs. I adapted one of his concepts and managed to create my own trading system out of it. And this is it. I hope you enjoy it. Let's crack on. So we've got the theory first, and we'll take a look at the charts. Okay. Rules-based system, non-discretionary. Firstly, we'll go for the non-discretionary rules, and then we'll move on to the discretionary ones. Optimal time frame M5, 5-minute chart. Okay. Ideally, we look for a key high or low to be taken, whether it is a high or low that is formed after the open on the current day or a previous day's high low. Unlike other opens, we don't reuse it on the following trading day. So what does this mean? So for example, the daily open, okay, we can drag that across and use it. If we have a daily open on Tuesday, if the market's been ranging on Tuesday, if you stretch Tuesday's open across to Wednesday, it might be an important level that offers us a trading opportunity. Weekly open, okay? We can bring the weekly open across to the following trading week from the previous week. Monthly open, for example, if we have the monthly open mark for June and price is still around about the same area, we can bring it across into July and it might offer us an opportunity, okay? Prior yearly open, say yearly open of 2019, we can bring that across and potentially we have a relevant level in 2020. Okay, but would this we don't take this onto the next day. Okay, the session open is for the trading day only. Okay, not the following trading day or the um, or any trading days after the initial one. Discretionary. Risk, depending on our appetite and using our yield model to define targets, we can allocate either an aggressive or conservative risk, and we'll go over that on the charts, okay? Targets, this is a low time frame in and out system, so targets are completely discretionary. Um, when the market moves in your favor, if it moves away really fast, you're 2, 3, 4 are up, uh, but you had targets and they've not been hit yet, maybe sometimes they go out of the window and you say, okay, I'm taking this money off the table now, and you with this system you can do that, and I'll tell you why you can do that because there is an opportunity to take this trade tomorrow, definitely. Okay, not definite that there's going to be a setup, not definite that you're going to win. Of course, this is trading, right? It's not magic, but there is going to be an M5 candle that opens in Tokyo Monday to Friday that we can put a grey box around and watch price how it behaves. And if it offers us an opportunity, then we take advantage of it. But we do know the candle's going to open up tomorrow, so we don't have to worry about this. Um, we don't have to worry about chasing trades or any emotion. We can remove from this strategy. Uh, for example, FOMO. We don't have to worry. We know there's going to be another open tomorrow. Okay, so let's take a look at the charts. This is US dollar JPY, okay, US dollar yen. Price drives up off the open. So firstly, let's take a look at the, you can see how we've marked it, okay? So look at the gray, session open, okay, the gray box. What have we done here? So this is how we mark it. We mark from the high to the low, the entire candle on the M5 on the daily open, okay? And you can see the daily open there opens at 4 a.m. my time. So what happened initially? We sort of had a little rounded bottom and then we pushed up. Price drives up off the open, creates a high, and falls back to the session open. Okay, falls back to the grey box. Early shorts enter the market. Where does their risk go? You guessed it, above the high. Okay, hoping for the breakdown. Price bounces off the session open and the daily open, pushes back up, hits the orders. Okay, this is our trigger to say, okay, this is what we wanted to see. Now, what do we want to see next? We want the market to break or to move away and trade below the gray box, the session open. Okay, what does it do? Price breaks and closes below the session open. If you look in the middle there, okay, breaks and closes. We have that candle. Then we get we get the trades back. As you can see, the circle retraces back into the gray, has a clean retest. We either have a limit order set there, or we can enter at market. And as you can see, the target was the prior support level on the previous day's trading, which was the blue down the bottom. And you can see with the R tool, depending on um, depending on our risk appetite, okay, this is discretionary. It's up to you. You can have your stop at the high of the day because you know if the market is pushed up there, taken early shorts out, and it moves away, the likelihood of the market coming back up there is, you know, you're wrong there. Okay, is if it wants to break away, that is the high for the day. Okay, and it will expand into a red candle, and the market should tick away. The other option is you can have your stop above the grey. Okay, which would have gave you 4.2R. But the most important thing to identify here is not how much money you're making. It's about identifying the structures, the way the market pushes into the early shorts and then moves away and breaks below. Okay, once it breaks below, we either set a limit or we wait for it to pull back into the level, sell, target, close trade. Market open at 4, we're finished by 9. Entry was at roughly 8 o'clock. Hit target by 8:30. 30-minute trade, boom, out, close. Okay, that is us done. We come back tomorrow. So even if you had the conservative stop 1.4R, you come back tomorrow, wonderful. Okay, and that's the beauty of this system. And as you can see, a little bit later in the day, look what happened. Look in the middle, 2 p.m. my time, London Open. So you can see what happened. If you look to the left, it kind of broke down, didn't it? Sold off, ranged, and then when London opened, it pushed up, created a high. Okay, you can see the red X. And then what did it do? Ranged a little bit for a few candles, and then boom, pushes back up into the session open, the grey box. We are still on the same trading day here, okay? We're now in the London session, and it's still useful, okay? What has it done? It's taken out, it created a high in London, took it out into the grey. You see that circle on the right, the second circle? Where it had a perfect retest of the grey. Price takes out London session high into the session open. Okay, so as long as we've got the order flow, or we're on the right side of the market, and we understand the flow of especially this is a great example of session flow, by the way. Market creates a high in Tokyo, breaks down, ranges, takes out London's high, so you get that down move, range sideways, starts breaking down in New York, and there will be a lesson going over session flow. Um, and we're not going to go over it too much in now, but as you can see there, very important for you to study price like this and just watch it. How it behaves is incredible. Okay, could have gotten a second entry later in London Open. Once we had the SR formed, we took out the high, then we broke down. Nice little rounded retest, entry, risk at London's high. Yeah, market sells off in New York opens at 7 p.m. My time, so 1900. You could see it started breaking down then, and you would have got a 3-hour trade. So you could have had a 1.4-hour, boom, 3-hour trade later on in the day, 3.45, 4.5 hour, and you're finished for the day. Okay, so the wonderful thing about this is if you get if you get on the right side of the market and it creates a high very early, it can often trade back in and continue to the downside. If the high was in and the candle was going to be red, which in this case it was, you can get a second entry a little bit later on. Okay,